Hello, YouTubers. Welcome back to Brain Bang TV and welcome back to the five videos. That's Football Index videos, five for short. Thank you guys for joining me today again. And I want to start by kind of mentioning about the video from yesterday. So I dropped a video yesterday just to elaborate on what we talked about with in fact, this is probably most likely a kind of a mini series for order books, and I'd like to maybe include a bit of the mechanics of football indexing into that category of what was discussed in general within these videos. So yeah, hopefully people who've seen that video, thank you very much for doing so, and you hopefully have got value out of it and somehow maybe gained some insightful information with regards to how Football Index works as a whole. So yeah, it was very nice to kind of get that out there and hopefully kind of get my point of view as to how I think people should want to understand the index to a certain point. I don't see why you should want to put your money into something you don't fully understand how it works to that kind of level anyway. Saying that, a lot of the issues that I raised in the video that I last released, and I wouldn't, like I said, I didn't particularly call them issues because I did have um, a feeling that Football Index team already had this as something that was resolved because the platform wouldn't have come this far without those issues being kind of touched on to a certain degree. So yeah, the video I'm doing today saying that is just to kind of shed some light on some information that I kind of stumbled across last night, and I thought was very, very, very insightful information, very interesting stuff. Because the bit of document I'm going to read out to you guys, that kind of details pretty much explains a lot of what happens in the background with regards to a lot of the points that I raised with regards to the liquidity of players on the market when they're not as expensive or as well known as some of the Van Dijks and the Mason Mounts and any of the kind of top players in the world currently. So there's a lot of lower leagues out there. So you'd expect to have a somewhat illiquid market to a certain degree because of the fact of the football landscape changing regularly and the fact that there is uh, um, not a lot of people that might want to buy a certain player at a certain time, as you may know, and also the platform's really really new. So those kind of things do play a part when it comes to creating a market like this. It's not an easy fit what the team have done at FI. I really do take my heart out to them because they've done an absolutely amazing job so far, and I hope they continue doing that in the future. Now, saying that, I'm gonna go and read this document because I think it does really explain a lot of what we talked about yesterday or the day before. And by the time I'm done with this, hopefully, you guys can kind of understand what I was talking about in my previous video, as well as how this kind of clarifies a lot of those questions that I raised in that video. So yeah, what I'm going to do is I'm going to read a lot of each section and hopefully maybe break it down a little depending on what I get from it and how much I can potentially elaborate on what's been said on the document already. So without further ado, let's get cracking with the document. So it says the market maker FAQ. This is off of the Football Index Zendesk FAQ Help Center, right? So um, it starts by saying, what is a market maker? Now, a market maker is an entity whose mandate is to buy or sell whatever the market trades in order to help keep the market moving, which is also known as being liquid, which is a lot of what we talked about in the previous video about the liquidity of the market. Now it says here, in order to achieve this, a market maker will hold inventory short term by buying and then releasing the inventory by selling. So essentially, exactly what we're doing here, only they've got a sort of a set rule guiding the way they do business, because they're essentially meant to be an invisible layer of the market that no one sees, right? So that's basically what that is. So they involve themselves in buying and then holding the inventory and then later selling off that inventory on the market. Now it says here markets of a certain size generally have market makers. They help the market by ensuring, sorry, I can't read today. They help the market by ensuring trades are easily matched. Without market makers, a market would not function as fairly and efficiently as it could. Their benefits are distributed distributed widely and felt by most trade market participants alike. So essentially, it kind of covers what I was trying to talk about yesterday, where if you have a lot of players that are not well known, players that are out of form, injured long term, those kind of scenarios where the market potentially will be very, very thin and very, very liquid. They're saying the jobs of those market makers is to complete the middleman in that facility. So um, basically, they help facilitate a lot of the buy trades that happen, as well as the sell orders that come in. So yeah, I'm going to continue reading so far. Pardon me. Why does Football Index have a market maker? Football Index uses the services of an independent market maker who trades on behalf of accounts held by Index Labs Limited, which owns Bet Index Limited. So this is all kind of a third-party functionality that works on behalf of Football Index. So at this point in time, Football Index does not have an order book functionality normally associated with an exchange, which is what we're led up to this topic in the first place. And it says, consequently, the market maker can only buy shares via the buy price and sell back this built up inventory only via the sell queue. They do not use the instant sell. Right, that's interesting. So they do not use the instant sell, okay, but they still provide a sell queue for the sell now, or just the sell button that you see on the platform. Now, I'm not sure how the instant sell then would work. Maybe if I have some sort of share in creating that, because there's a bit more room to make a bit more gains because of the wide range and spread between the buy and the instant sell. So maybe they have another third party that's involved in the instant sell side to create to provide the liquidity on that side of things for the general market. Who knows? But yeah, it goes on to say the market maker does this in order to gain valuable experience ahead of the incorporation of order books, and to also provide liquidity to the sell queue by buying bets from it, which, as previously mentioned, are then resold to the market in due course. So I hope this makes a lot of sense. It says in the early days of Football Index, we learned through customer feedback and experience that there could be timing mismatches on supply and demand for a given player due to the constantly changing landscape of football, and recognized it as an important element of a liquid market. So that's exactly what we've just spoke about. Those changing landscapes of football with people being out of form, injuries, player swaps, transfers, all those kind of things play a part in creating a very illiquid market based on the fact of what we're talking about there. So it says here, our intention from this provision is not to profit from their trades, but to provide liquidity, as no market can function without it. So we have invested a significant sum over time in buying shares which are held by the market makers, right? See, so they must have set up this platform and sold a portion of these shares off heart or off the cuff, potentially even uh, prior to the initial public offering, sorry, the initial player offering. So they would have done that only to then sell it on to provide liquidity to the market where there's mismatches of liquidity, but also potentially create some measure of gain for the market makers. So it's kind of a win-win for both sides. They provide liquidity, they sell us shares, we buy the shares, they make some profit, we make a front profit, and technically all win-win. And we have a stable market as football index seem to have been running like so far. And moving on from that, it says, how does it actually work at Football Index? It says the market maker is subcontracted by Bet Index Limited, the operator of Football Index, to another group company to avoid any conflict of interests. As Football Index develops, we expect further third-party market makers to participate in the market. So this might potentially go full on stock market on us and have a bunch of market makers, third parties, and even I did talk about this. You might potentially see, and I'm talking a long time away from this. You might see other platforms that will potentially be their own. There'll be a broker, and then sub. Basically, FI potentially could take themselves out of the whole scenario of being the actual market make being the platform provider. They could literally just facilitate the whole service and then take themselves completely out of it, and you'd have market makers as brokers, kind of like Football Index, but have different names, buy licenses of Football Index, and then what you see is you can then have slightly different um, uh, third party companies with their own little twist of what they can offer you as a service on their platform, but all running off of the Football Index metrics of what they're doing right now. So that's kind of what I've been thinking it was going to be like eventually anyway, if the market does get big enough for it, which the room does seem to be there for it to grow. So it says here, as Football Index develops, we expect further third-party market makers to participate in the market. The market maker has policies that they must adhere to as set out by the mandate from Bet Index Limited. These restrictions include and are not limited to the volumes of shares that are eligible to purchase, when can purchase them, as well as the class of shares that they are eligible to trade. Market makers, so they've got a lot of restrictions basically is what they're saying. So they're not as plain and simple traders that we are. They're very restricted in what they can and cannot do on the platform because of the kind of role they play on the platform. So it says market making involves buying and selling shares through trading accounts, and this activity is limited through financial control relating to the scale of the market. The market maker is not permitted by the board at this time to hold more than a small percentage of the market, which is great. This is designed to avoid having significant impact on pricing. So they've thought this well out, and it sounds all right so far. It says this type of trader makes up a small percentage of the market trading volume. It involves buying shares from the sell queue to help reduce the length. It involves buying shares from the sell queue to help reduce its length, um, but may also at time involve buying shares not in the sell queue to manage and hedge risks. In order to facilitate complying with these policies and to also help manage the substantial risk that the market maker is undertaking, they have a different level of access from the customers, which is what I've just mentioned. With the future introduction of order books and and other third-party market makers, this function will become more sophisticated with multiple orders on both the buy and sell side of the order book for increased liquidity. So that's kind of what I was getting at with the with looking at Origi and going on the order book and having them completely empty. From the sounds of it, it looks like the market makers will participate in the flow, in creating the flow, the liquid flow on those order books when they do get released, as and when they get released. So from the sounds of it, that's kind of what is already going on. It's gonna slightly adapt to the order book integration. That's what the sounds of it is anyway. So it says here, The way that Football Index currently makes this liquidity available is by consistently quoting both the buy price and, where possible, a price that it is willing to buy shares, in brackets sell price. So they kind of play on both sides of the river, as it suggests here. Says the difference between these two prices is called the spread. This is done in order to reduce panic selling and avoid building risky positions that could impact the integrity of the market to market making, as noted in our game rules. If a player or the market comes under pressure, concentration risk, or market shock, spreads are widened and or instant sell can be suspended. This is done in order to reduce panic selling and avoid building risky positions that could impact the integrity of the market, as noted in the game rules. So yeah, the last section here says, what is the benefit of Football Index having a market maker for our traders? And it says here, as a result of the market maker's activities, more trades are completed successfully through the sell queue, hence avoiding the current spread associated with instant sell. However, the market maker must balance their books and ultimately sell inventory. This could make sell queues increase. However, on balance, the market maker will buy more than they sell as the activity is designed for their inventory to remain steady. So they're kind of just fluctuating on a kind of previously specified range of the quantity that they can hold in inventory before they ultimately start doing some buying and selling systematically to kind of provide and facilitate that liquidity on the market. So that's kind of what they're saying in a nutshell, and it does cover a lot of what I said before, and it kind of, I mean, they're saying that they've kind of taken themselves away from the market making part and outsourced that to a third party company. But funny enough, someone's left a really funny comment based on what I've just said, and it says here, um, this guy left a comment about a month ago now. And it says here, independent market makers. Actually, no, not too long ago. Independent market maker in bracket. You say, I'm not so sure about the about that. When they sit to this from the CEO, would get gambling commission to investigate. So, yeah, I mean, I've worked for a lot of companies over the years, and I kind of I've seen scenarios like that where they claim something's third party, or they claim it's outsourced, but technically it's insourced, or it's basically in the same building, but run by a completely different team or something. So it's not completely far-fetched. I do believe that Footwindow is quite a small platform, and Adam Cole is not a stupid man. Like, the guy kind of, he knows what he's doing to come this far with a platform this very unique and technical. So you'd expect him to take advantage of certain opportunities that present themselves to him, and the way you would see it is he potentially has a way of running two businesses in one in this scenario, because you could have him anonymously run the third party market making company, but that will potentially will change if that's the case anyway, because with the introduction of more and more market makers, they'll tend to be someone who's right up there, because that's what they do. They're the market makers. So they'll probably be someone who will knock them off that top role of being the main market maker on the platform, and hence that would then take away any kind of tampering that might be happening here. That's if it is anyway. But I'm not saying that. I'm just kind of going off of the comment McAllister left on here on the 29th of April 2020 at 8 in the morning. So something must have pissed him off. But anyways, I hope you guys kind of got what it is this document kind of details, and the fact that it does help clarify a lot of the issues and conversational stuff we discussed in the previous videos. Now, saying that, I just wanted to give a shout out to Silly Point, who's been very, very responsive when it comes to communicating with me and giving me his point of views with regards to some of the stuff that he thinks on the platform and whatnot. And he actually left a comment that was very interesting because I've actually not read anything regarding any of the technicals of football index and the mechanics per se of how it works. So that was the very first bit of mechanical information I've got so far, where he's mentioned that from what he understands, it takes around about 600 to 900 pips, depending on how expensive that player is, for it, the player's price value, to move up or down by 1p. Hopefully that makes sense. So I'm guessing it takes about 600 to 900 blocks of shares to either be sold or bought for a player's value to go up or down by 1p in price. So that was a very, very interesting comment, and I've never seen that before. And I've always kind of wondered what kind of, I mean, they built this, right? So that they must have had exactly specific rules that make it function the way it does. So that would be one of those specific rules of that 600 to 900 block buy or sell side to make the value move. Something I'll be looking to try and research and see if I can grab any more kind of information regarding the mechanics of the index. For those of you aspiring traders and potentially want to trade off the back of, say, maybe use Football Index as a stepping stone to understand trading to a certain point, then yeah, the market might get to a very exciting point where it could really then start benefiting people who are looking at this as a stepping stone to an investment career or an investment kind of background. So yeah, hopefully that helps. As it is called the help center. But yeah, I think that's all I wanted to talk about today. I don't have any more. The portfolio is a little bit down. The dividends so far almost at £60, so doing really well there. But yeah, nothing else I need to talk about. Hopefully, we will have, actually, before I go, we're going to have another update from Adam Cole in 2 days or so. So on Wednesday, we're going to have an update from Adam Cole regarding the first phase, phase one of the order book implementation. And hopefully, we're going to get a little bit more detail and in-depth look into what the look and feel of that new functionality is going to be like on the platform. When we get that, I'm gonna try and get another video done and push that out there for you guys to have a look at what my newfound view of what he's going to be detailing out will be. Hopefully, it's going to be great news. Hopefully, it's going to look slick, and hopefully, it will improve our trading for the better as a whole. So yeah, upwards and onwards, as they say. So, good luck trading, guys. I hope everything works out for everyone watching the content and anyone else out there. Do share, subscribe, and like the content. If you have any comments, leave them for me, and I'll be sure to get back to you. And as for that will be it, really. I'll catch you guys in a few days or so with the new updates on the platform. Thank you for joining me. Bye for now.